Tiffany, first, let's just get your thoughts on this employment report that we just got.
Yeah, well, clearly the headline number was weaker than consensus expectations. And if you kind of dig into the details of the report, it's exactly what you just mentioned. We can see through the decline, 500,000 decline in leisure sector payrolls, and specifically, payrolls in restaurants, that really this weakness was the result of, the surge in virus cases, which resulted in more targeted closures of restaurants and things like that in the economy. Now I will say that I think, the silver lining here is that, the job losses, were concentrated in the leisure sector. They didn't spill over into other sectors like we saw in March. So that's good news. But clearly this was worse than the resurgence in the virus that we saw in the summer.
Is it really going to get any better, Tiffany, in January, given the numbers that we're seeing with the COVID pandemic and how quickly it's spreading?
Yeah, I think it's certainly right that the next couple of months will be again pretty weak. But I think that, one thing that makes us at least pretty constructive, on the outlook for growth for the full year, is that we also have received additional stimulus from the government spending bill, COVID relief stimulus from the government spending bill that passed in late December. That's really important because that will help bridge the gap for many people in terms of their income. To get us through this. I think the other thing that's very important for the outlook, is just the path of vaccinations. If we can ramp up vaccinations and get a good portion of the population vaccinated by the middle of this year, that's going to create a lot of pin-up demand. People are going to feel better about traveling. Some of these leisure sectors that have been so hit by the pandemic and so weak, they can start to really recover.
One thing
and that's what we're looking out towards.